Welcome to the Metal Man Show with your host, Will Hart. I'm producer Jack. Each week, we will answer your questions about precious metals such as gold, silver, platinum, and palladium, as well as discuss what the metal experts are saying in the news and what it could possibly mean for you. Here's your host, Will Hart.
Hey folks, I am your host, Will Hart, for the week of February 28th, 2021. Let's jump right into it. Gold closed at $1,736.48. Silver at $26.77, platinum at $1,197.99, and palladium at $2,352.88. All right, Jack, what is the question of the day?
Okay, Will, here's an emailed question from Nancy in Houston, Texas. She asks, can you put physical gold and silver into a 401k?
That is a very common question, Nancy. And again, hopefully you're staying warm out there in Texas. I know you guys have been beaten up with some cold weather recently. Needless to say, yes, you can put precious metals into a retirement account. And again, pretty much any type of retirement account, as long as you are over 59 and a half. If you've got a regular, traditional, or Roth that you create your own, you can do whatever you want. You can put those metals into that account, tax deferred, penalty free. And when you decide to sell those metals, those funds can also be rolled back into another IRA, tax deferred, penalty free. So it's tax deferred, penalty free going into gold and silver, and tax deferred, penalty free going back out of metals. And as I will add this, if you are currently employed and you've got a 401k, a 403b, a 457, if you are over 59 and a half, the likelihood of you being able to do it is very high. So again, that's something that the folks over here at Priority Gold in the IRA department can answer that. They'll actually make a three-way call with your custodian to find out if you have the ability to roll over that tax-deferred, penalty-free into precious metals. And in reality, it's just finding out whether or not you can or can't do it. I would say 95% of folks who are over 59 and a half have the ability to protect and diversify a portion of their portfolio out of paper into physical gold and silver. And Jack, what is next on the topic?
Thanks, Will. I hope that answered Nancy's question. Now to the topic of the week. What can the Metal Man tell us about the Buffett Indicator?
Okay, great question. So, Warren Buffett, as many of you know, he is considered as one of the most successful investors on the planet. He didn't create Apple or Microsoft or Facebook. No, he puts his money in the market, knows when to pull it out, where to move it, etc., etc. Needless to say, he's done very well for himself. He created something called the Buffett Indicator, where he takes the total market cap of all U.S. stocks relative to the country's GDP. So he takes that numerator and denominator and it spits out a percentage. Warren Buffett's advice is when that indicator gets to over 100%, meaning the market's at full value, start making your exit out of the market. Needless to say, let me give you some examples. In 2008, when the market crashed, that was the last crash we had, which was 13 years ago, the Buffett Indicator reached 105.2%. So we were 5.2% on the red and the market toppled over. Needless to say, that indicator slid all the way down to 56.8%. That was over about a 2.5, 3-year slide. As the market slid south by about 40%, wiping out globally $34.4 trillion, gold did just the opposite. Gold climbed from $700 to over $1,900 an ounce during that slide. Needless to say, the Buffett indicator is reflecting the market has been climbing very aggressively to where it is now. It is currently not at 105.2%, it is currently 188.6%, reflecting that the market is extremely, extremely overvalued. And how did that come about? Well, stimulus programs, money printing, stock buybacks are a big contributor to driving that indicator to such historic nosebleed levels. Needless to say, diversifying and protecting your portfolio would be paramount, especially when you see the indicator at such historic highs. And again, all I can do is just tell people, be diversified. Listen, your broker is not going to recommend precious metals, physical gold and silver. Why? He doesn't sell them. Needless to say, we do believe in diversifying, having a portion of your portfolio in paper and a portion of it in physical gold and silver, physical commodities. Anyway, I hope that answered the Buffett Indicator. That to me is something that I really pay close attention to because it definitely is reflecting that we are poised for something big. And I don't know when that's going to happen, but it's probably going to be coming sooner than later.
Well, that was a great breakdown of the Buffett Indicator. Next week, we'll start off with a question from Mike out of Scottsdale, Arizona, who asks, Is there a difference between paper gold and physical gold? And if so, what?
Okay, well, I certainly look forward to answering that question from Mike next week. I hope all of you found this information useful. Please don't hesitate to send me your questions at w.hart@prioritygold.com or in the comment section below. Until next week, stay safe and stay golden. This is the Metal Man signing out. Take care.